Finance Minister Nirmala Sitharaman is set to present the Union Budget 2025 on 1st of Feb. The previous budget brought a wave of optimism to the jewellery industry as the import duty on gold was cut from 15% to 6%. This time, the sector is hoping for a further reduction to 3% as it will give a boost to the industry's financial health. Jewelers also want Sitharaman to help the middle class buy gold by permitting jewellery purchase through monthly installments or EMIs. Apart from this, the industry also wants the government to remove capital gain tax on sale of gold and silver jewellery and to put in place a single regulator for the entire gems and jewellery as a space. Hello and welcome to this Budget Special Commodity Champions. I'm Anisha Gupta, and joining us to discuss the jewellery sector's expectations is Surendra Mehta. He's National Secretary at India Bullion and Jewellers Association. Mr. Mehta, hi, thank you so much for joining us. And I'll start with the duty first. And there is a lot of concern, fear as well in certain sectors that there could be a review to this duty. Some do expect that you could be looking at further cuts, but there is a bit of a concern that there could be a review and you could see the duty hike as well. What are you hearing? What have your representations been?
See, we have always been advocating for reduction of the duty. Let me tell you that duty cannot be increased because in spite of the duty being reduced by 9% in the last budget, the total import numbers of gold have not gone up. So that is why we recommend that the duty must be reduced now from 6% to 3%. Last year, our total gold import was about 746 tons. Currently, up to November, India have only imported 664 tons of gold. So in spite of reduction of duty by 9%, the import numbers have not gone up. So even if the duty is further reduced by 3%, the numbers will definitely not increase. We want reduction in duty, not only so that it helps the traders because it saves working capital, but it also helps export for the country, and for which our current account deficit is already in trouble. Our rupee is already weakening because of this. So once we start exporting bullion, our basic idea of reduction in duty is to allow export of bullion currently, which is not permitted in our country. So this is the reason why we are asking for reduction in duty by further 3%. Also, one more reason that there are a lot of FTAs agreement which India has entered into with countries like Africa, Konarki, or Indonesia, Taiwan, wherein the gold is imported under the guise of platinum with 0% duty, silver is imported at 0% duty. So once this gold duty is reduced to 3% or less than 3%, probably all these FTA will become redundant and there would not be misuse of any FTAs.
The other thing that the government really did well was with IIBX, and we've seen that one grow in the last 1 year. The first year, not so great as sense of numbers, but the second year definitely has shown a very strong performance. Are you anticipating the finance minister to add further teeth to this one?
Absolutely. We have always been advocating that the entire gold import of our country must be regulated only through the exchange. Now, these exchange already exist in our country, which is India International Bullion Exchange. And that is why we have suggested that there should be some incentive for importing through the IIBX, importing gold through the IIBX. The export of bullion can also be effected through IIBX. So once we have IIBX in its place, then I don't see there is any room for bankers directly bringing gold on consignment basis and then selling it to the bullion dealer. Why not bank also use the IIBX platform to carry out their business? So our idea is that the entire gold import of our country must be routed through the IIBX. It will not only help regulating the import, but it will also help boosting the export of bullion in our country.
The third major point that we keep hearing, Mr. Mehta, is about the EMIs. Well, yes, all white commodities, all luxury commodities have this facility of EMIs, barring jewelry as a sector. This has been an ask for some time now. What makes you think this could see the light of the day this time around?
Well, if you ask me as the secretary of IBJ, I would like to have EMIs on jewelry, but I understand it is not in the hands of finance minister. This is in the hands of the Reserve Bank of India, whether they will permit this or not. But I am keeping my fingers crossed, and I hope that this is one day this will be permitted, because eventually the government also needs to understand that they cannot only allow people to invest in equities and mutual funds. They will have to eventually allow the Indians to invest in the commodities such as gold, silver, and other commodities also. So for which EMI is a must. And I think there are 16 crore demat account in our country, but there is no mechanism wherein gold can be credited in demat account. The sovereign gold bond scheme has already been closed by the government.
Mr. Mehta, since you mentioned RBI for EMI and then you talked about Commerce Ministry and Finance Ministry, I do understand in my previous conversations with you that one regulator is something that you've been rooting for a very long time as yet.
Absolutely. See, we have to run from pillar to post, from Reserve Bank of India to Consumer Affairs Minister to Finance Ministry to Commerce Ministry, then to the IFSCA. So why not have one regulator only for our industry? So all our issues can be discussed there and there itself. We have been advocating for electronic gold receipt for a long time, which has also been announced by the finance minister almost 3 years back. But this has been announced by the finance minister, but because of some GST issue, the electronic gold receipt has not been traded in our country. Now these are the CBIC comes under the purview of finance ministry only, but there is nobody in the CBIC who can help us out in this manner. So what we want is that basically there has to be a single regulator who can understand our problem. Electronic gold receipt is the future in our country, because it will not only help gold monetization indirectly, but it will also boost lending and borrowing mechanism, due to which we can reduce our input.
Mr. Mehta, I've asked you all the points that I thought were on the priority, but is there something that one thing that you would want to represent, to request, and hope that that book would have for the jewelry as a sector, in sense of a clause or in sense of a measure? What would that be?
Earlier Niti Aayog has already prepared some report, but some of the recommendations have been implemented. But to be honest, we are looking for electronic gold receipt, and this must be implemented immediately if we want to save foreign currency. This will help reducing our current account deficit, and this will help lending and borrowing. Today, if I have a gold and some jeweler needs a gold, I have no mechanism for there is no regulator who will allow me lending gold to a jeweler or borrowing gold. So this kind of mechanisms are required in our country. We'll have to think beyond GST and income tax. We'll have to now think in terms of foreign currency, how to save foreign currency when we trade gold in our country.
Oh, well said that. Have to think beyond GST and income tax, and have to start thinking Forex and the global markets, of course. And there's a long list that the jewelry as a sector and IBJA also has put out to the finance minister. Let's see what we get into that one on 1st of Feb. Mr. Mehta, as always, thank you so much for joining in, and thank you for sharing your list of expectations during this budget. Well, let's now talk about cryptocurrencies. And this sector is hoping that the budget will introduce a clear framework to regulate cryptocurrencies, especially at a time when pro-crypto President Donald Trump has taken charge in the United States. Crypto exchanges want the Indian government to align its regulations to that of other countries. They're also seeking a relief from 30% tax introduced on virtual digital assets in the 2022 budget. Joining us to take this discussion ahead is Ashish Singhal. He's co-founder CoinSwitch. Ashish, hi. What a year 2024 was, but 2025 has begun on a stronger note when you talk about Bitcoin and various cryptocurrencies. Globally, we've seen Singapore, we've seen various other countries in Asia, and now US actually taking a lead there. Are you anticipating a positive cue coming in from the Indian markets during this budget?
That's certainly a hope, with this budget. Two important things which kind of hurting the industry today. One, right, like you rightly said, 30% tax. But apart from 30% tax, we also have no loss offset, which means that if a users make profit on one crypto, loss on another, he doesn't have to pay tax on net profit. He has to pay tax on his full profit without considering his losses, right? And that is the biggest hurdle with the retail investor today in getting onto crypto. Second is definitely TDS. Every sell transaction is bounded to 1% tax deduction at source, which is then deposited to the income tax department, which kind of reduces the capital of a crypto investor and does not allow them to trade a lot. So that is the reason that in spite of a resurgence in the industry in the last 3 to 4 months after the Donald Trump election and a lot of crypto positive policies across the world that we are seeing, India is still not seeing that growth in this sector. And the main reason is that these 2 points are hurting the overall ecosystem, allowing users to maybe go to foreign exchanges to ensure that they pay less tax compared to what they will end up paying on a domestic player, right? So this is the ask of the industry as well on how can we equate and create a level playing field for domestic players to succeed in this ecosystem when we are seeing across the countries very positive regulations for crypto coming in.
Ashish, cryptocurrencies is one part of the big blockchain, really. We've seen DeFi and NFTs. And would you say that a clarity in sense of a framework or a clarity in many of these tokenized assets is something that you perhaps are looking forward to?
Absolutely. I think crypto is an evolving subject. Like you said, crypto is not just about tokens, it's Web3 ecosystem in general, it's blockchains, it's a DeFi, it's NFTs, it's a lot of things combined together, and the innovation is still happening. A lot of new things are coming in this industry, and regulations has to follow that path, starting maybe with clarity on taxation to getting to regulation of VASPs, virtual asset service providers in the country, and over time regulating each and every sector. But a lot of these sectors are still evolving. Maybe premature regulation may hurt them more than helping them. But some of the areas in the blockchain ecosystem, the Web3 ecosystem, are very developed. We take exchanges, for example. A lot of developed nations around the world have clear regulations, licensing for crypto exchanges. And that is what we need. That is the need of the hour at this point. And over time, definitely, across the crypto ecosystem, we have various different sectors which needs to be regulated. But starting on, I would say that, VSP regulation is a must have for India.
Point taken. Also, Ashish, just to get a sense of numbers on how many people are we talking about here, if the government has to take a stand. I do understand that in 2021, a lot of Indians were part of crypto as a segment, and then came 22 with taxes. 23 wasn't such a great year in sense of prices. 24 has really run up, and 25 shows a lot of promise now. How many people, how many participants are there in India right now? What is the government looking at in sense of a number here?
So obviously there are many players in India, CoinSwitch being the largest with over 2 crore registered users. I would say that, total, unique accounts across the industry could be in few crores range. So we are looking at a market which is growing substantially. In 2021, we have seen, tremendous growth in the industry, a lot of users coming in. 22, 23 was little, slightly slower growth, but 24 has seen the resurgence. Apart from retail users, a lot of interest from HNIs, from different fund houses are also coming into crypto, right? We have seen after the ETF approval in the US, BlackRock have crossed over 50 billion of investment into the Bitcoin ETF. Similar chances we are missing out in India. And through positive regulations, we feel that this entire sector, not just the retail, but also making sure that HNIs and even fund managers are able to advise into crypto can happen once we have clear regulations in this sector. So we are not just missing on crores of users who are already into crypto, but it's also the future potential on creating different asset classes, helping users diversify through crypto as an asset class.
Well, that point is well taken, Ashish. So it is about clear regulations, licensing and tax rationalization is what crypto as a sector is anticipating during this budget. Thank you so much for joining in and putting out a sense on what the crypto sector is looking forward to this budget. But with that, it's time for a quick break. But don't go anywhere. We will be joined by Ole Hansen of Saxo Bank on the other side with his sense of Indian budget and, of course, the international cues. Welcome back to Commodity Champions. Well, budget special. February 1st, 2025 is significant for India due to the union budget. But the world will also keenly watch the United States as President Donald Trump has threatened to impose 25% taxes on Mexico and Canada and 10% additional tariffs on China from the 1st of Feb. Joining us to discuss the impact on commodities is Ole Hansen. He's head of commodity strategy at Saxo Bank. Mr. Hansen, I thank you so much for joining in. Before we delve into the global markets, let me ask you about the Indian budget. And I'm assuming you'll be watching that one too with the sense on whether or not the Indian duty gets changed for gold or silver.
Well, absolutely, and good afternoon. Considering India being such an important part of the physical demand for gold and silver in the world, then clearly any changes that can improve that outlook will be taken note of around the world and in the market. So yes, we will be watching and looking for the outcome.
In any of the scenarios, if there's no duty cut or increase, or if there actually is a duty increase, what's your sense on what will happen to the prices here? Because today in India, we're trading at a $50 of a discount already ahead of the budgets.
Well, that could obviously weigh in the short term. We're also just going through a little bit of a wait and see in the market here. I think also investors still trying just to get a better feel for this new levels that we reached last year, where we're paying record high prices in local currencies as well, and that's potentially also dissuading some demand in the short term. But if there's a belief that the ongoing trend is still upwards, then I think that over time will be mitigated, and buyers will eventually come back, and that will drive down the discount again.
First Feb is important for India in various ways. The budget is one part of it. And then, of course, the international markets is something to watch out for. How are you reading the 1st of Feb with the kind of threats that we have from US about putting these additional tariffs?
Well, just a lot of confusion initially, because obviously we're only 1 week in, and there's also already a lot of fatigue in the market, I would say. And then on top of that, we had the deep-seeking missile hitting the market yesterday. So the market is really just slightly on tenterhooks here, waiting for some signals or some clear signals of what we're facing. But obviously, some of the market has been reacting already, especially around the New York Futures Exchange, where we're seeing premiums for gold, silver, platinum, copper, all going up relatively to international prices, for worries that tariffs will be applied to imports into the US market, which could uproot some of the normal trading behaviors in the markets.
Oh, well, absolutely. I know these are difficult times and markets would want to watch out on what really happens on 1st of Feb. There also have been reports all that a lot of buying has happened ahead of 1st of Feb, and people are sitting on a lot of stock right now. With China also getting into Lunar New Year holidays, what is your sense on how the next 10 days could pan out really? And what also is your longer term view for many of these commodities?
Well, generally, we started the year on a firm footing. If we look at across the sectors, we are up on all of them. And I think that's probably a little bit of a surprise to some, considering that the worries about the potential tariff impact on global growth and with that demand. So generally, a firm start to the year. Some of the gains has been given back in the last week, but generally we are trading higher. And I think we still have to focus not only on what potentially will happen on the demand side, but also on the supply side, where we're seeing some commodities being a little bit more challenged, where we're seeing supply deficits this year underpinning prices. So even though on balance, perhaps the market are somewhat worried about the outlook for growth and demand with tariffs potentially coming, then I think the underlying strengths we're seeing across many of these commodities is likely to stay. Copper is an example. We're holding well above key support. Oil markets are range bound. Precious metals near the record highs. So generally, and agricultural commodities also on the move already so far this year. So generally broad strength we're seeing.
So what you're saying is that if tariffs do come, then the commodity prices will continue to gain higher. But if this is just a war of words and we do not see these numbers go through, are you looking at a correction at some point in time? And in that sense, what would be your longer term view?
Well, the correction is probably most related to the investment metals, simply because investment metals has been bought for the last year or last 2 years because of the uncertain times we're living in. If we do see the tariffs being scaled back, potentially that could have a negative impact. But the flip side of that is it could actually also lead to a weaker dollar, because the dollar has been sought as a bit of a safe haven against all these tariff threats. And if the dollar weakens, then obviously that could be positive for commodities. So generally, the focus will probably primarily be on the metal space, because the energy sector is very much range bound for now. The agricultural is still a lot to do with weather, and obviously we have no control over that.
Energy sector is what I was coming to next, and we've seen the crude oil prices come off its highs as we're looking at US President make all kinds of statements about drilling more, about ensuring that the prices decline from here, also telling OPEC to reduce prices, those sanctions on Russia. How are you, in light of all of this, looking at crude prices ranging for this year?
65 to 85 range was what we put out in our first quarter outlook for the year. And so a slightly lower average or range that we saw last year. I think the drill baby drill is obviously grandstanding to the domestic audience, because ultimately US producers do not get oil out of the ground for $2 as they do in Saudi Arabia. It costs somewhere in the region of $45 to $65. So any significant increase in crude oil production, which there are no buyers for, will send prices lower to a level where production perhaps could be negatively impacted. So we have a bit of a sweet spot here, down to, I would say, the mid-60s, where production potentially can rise, but only if the oil companies see a potential profit, if they see that the longer-term demand is for big investments in the Mexican Gulf, in Alaska, and so on. So I think in terms of US energy production, it's probably more a question of gas production going to rise quite a significantly in the next 4 years.
All right, so it's going to be about gas production, almost not so much about crude, as you said, that the price difference is just so huge when you look at cost of production there. Thank you all, as always, for joining in and making sense of what the markets really can anticipate. And thank you for telling us that there already is a premium when it comes to gold, silver, copper in the international markets there ahead of 1st of Feb. Now, we really have to wait and see on whether or not and how much of tariffs do go through on 1st of Feb. And that's exactly what the markets will be reacting to as well. But with that, as we do that, that's all the time that we have on Commodity Champions. Thank you for watching.